Hello, everybody. I'm delighted to be joined today by Betsy Biemann, who is the Chief Executive Officer of CEI, Coastal Enterprises, that is based and headquartered in Maine, but operates on a national basis. Welcome, Betsy.
Great to see you, Tim. Thanks.
So it's about two years or so since we last interviewed you for the CDFI interview series. And as you know, this is a follow-up to that. And I just wanted to start by reflecting on really the last 15 months or so, because a lot has happened with the pandemic, the killings, in particular, the murder of George Floyd, as well as others, and a reckoning in America that systemic racism is a major challenge for our society. But not only that, also, the increased awareness of climate change, change in the political administration, and a lot of other things that have been going on. So what has it meant for you? What has it meant for CEI? And what has it meant for the communities that you work in and operate in?
Well, it's certainly been an extremely challenging year. I think when 5 or 10 years from now, when we look back at this period in our history, I think it will be very interesting to see how we interpret what happened. As I think all of the folks in the CDFI industry, we all pivoted, and immediately really the demands on us skyrocketed, both in terms of the need for temporary debt relief, as well as the needs of entrepreneurs who were trying to figure out what is happening, how do I respond when I've lost all of my institutional buyers if I'm a farm or a food company? What can I do now? And then as the wave of federal programs and resources became available, sort of, am I eligible? Should I apply? I'm afraid if this PPP loan doesn't turn into a grant, I'm saddling myself with debt I won't be able to deal with. And so our team just really responded extremely quickly, and fortunately had some investors and partners that really helped us to be successful at meeting those new demands. But it was an extremely challenging time, as I know it was for everyone. Happily, our team was safe, and a couple of folks who were exposed or got sick have recovered well. So our team has been fine.
So when you think about, you said that you pivoted and responded quickly. What did that entail, and what are the longer term implications for how you think about the work that you do within Maine and more broadly on a national stage?
So certainly we were really fortunate that we had resources from the Heron Foundation as well as from NeighborWorks that we had started investing in upgrading our IT systems. And so we were actually able to quite seamlessly go on a Thursday afternoon. We sent around the email saying, come in on Friday, bring your things home, because starting on Monday, we're all working remotely and we don't know how long that's going to last. And I have to say, if you had told me that day that we would still be working remotely, I would have been shocked. At that point, there was a great deal of uncertainty, of course, and we really didn't know what was coming. But we were able to do that in part because we had started upgrading our IT infrastructure. So that was a critical capacity that we had that a year prior would have been very different. We would have had many more challenges in working effectively that way. The second thing, of course, was that we had resources available to then provide debt relief to over half of our small business loan portfolio, which was critically important as well. And some of that was through folks who had invested in us, making those resources available more flexibly. And the rest was, of course, federal resources that sort of went through us. For example, our micro loans being paid for a period of time. A third thing that happened, which was really very interesting, was we were asked by the state of Maine to step in later in the year to help channel resources to businesses that we work with. And probably the biggest example was we, in about a 6-week period, we stood up a agricultural and food business infrastructure grant reimbursement program. We reviewed over 450 grant proposals, emergency grant reimbursement grant proposals, and recommended awarding most of those, and then transferred $18 million of CARES Act funds to those farms and food businesses. It was an extraordinary effort in a compressed time frame that was compressed because of the CARES Act money having the deadline of the end of the year. And so that was something that we had not ever made grants before last year. We managed several emergency response grant programs, and that has made us think about whether that's potentially a capacity that we might do more of in the future.
So one of the programs I know that you have around the smaller loan size for small businesses is the Wicked Smart program.
Wicked Fast.
Wicked Fast
yes.
Program. And I wonder, when you think about technology and you think about the grants, I mean, to process 450 grants, that's a large volume if you haven't done them before. So how are you thinking about, what the implications of more federal money coming, more state money coming, and the CDFIs being viewed as a really core conduit, and in fact, if not the sole conduit almost, at least as far as certain agencies within the federal government are concerned?
Well, certainly, I think the pandemic and the disproportionate impact of the pandemic on low-income people and people of color has, as you and your audience knows, really highlighted the important role that CDFI plays as those sort of capillaries channeling financial resources and non-financial resources to the edges of our economy. So it gets back to the point we talked about a little earlier about our investment in upgrading our IT infrastructure. That had enabled us to start the Wicked Fast loan program before the pandemic, where, in a sense, competing a little bit with the fintech industry, we wanted to offer a small loan product where folks could apply online, they'd get an answer within 3 days, and then within a very short time period after providing some additional information, getting their loan. And so we had that capacity already. We've made, I think, 45 Wicked Fast loans in the last year. So, not a huge number, but again, it was that was a year when, for a period of time, both folks were uncertain about taking on more debt, but also there were a lot of free resources as well. So I think that it just raises yet again the importance of technology for CDFIs. We have, we're not there yet completely. We have a ways to go as we started upgrading our technology. We reached out and talked to other peers, and what we learned is sort of what we knew, which is it takes a lot longer than you think. It's obviously challenging to be upgrading your systems while you're flying the airplane, and it takes unrestricted money, which is not readily available to all CDFIs. So I do think and of course it takes specialized expertise either within your organization or contracted with you to help identify the right vendors and project manage that work. So I think it's only going to increase in the importance in our field, but certainly having the resources available is a very necessary ingredient that is not always there.
So you've been lucky. I mean, I sense that you've received quite a lot of grant money over the course of the last 12 to 18 months. Is my perception right? And did that surprise you, given the circumstances in general, the environment of the pandemic?
So I think first, my board chair would say it wasn't luck. It was, a strong track record and hard work that brings those resources in, not luck. But it is true, as we all know, there were a lot of resources that became available, have become available over the last year, whether it was from banks. Certainly the technology industry has been making some wonderful investments through the Opportunity Finance Network, as well as the federal government. And it's been important to have those resources there, and I think it's also important that those not just be a flash in the pan, sort of once and it's done, because as we know, these are systemic economic issues in our society, and as we've seen, CDFIs are really very well positioned to be working with and in low-income communities and bring a mixture of their mission, capacity and interest and flexibility for innovation that larger banks and financial institutions don't have, and are not well positioned to advance. So, thinking about how CDFIs not only respond to the pandemic, but are sort of key players, not only in the small business and community facilities and affordable housing pandemic response, but next then, climate action, as well as infrastructure resources that may be coming through the federal government, sort of engaging CDFIs in that work much more centrally, I think will be really important in order to build an economy that's really lifting everyone like we feel that it should and must.
So, but one of the things that I've noticed over the last couple of years, particularly under your leadership, is that it's pretty clear that CEI is far more than just a lending organization, and that you have products, capabilities, competencies along the continuum of capital. Can you talk a little bit about why you've done that, and where you think you are in terms of that journey, and what's happened in the last a couple of years since we spoke last? Well,
so CEI has really started off with the small business lending, business development and coaching, and policy advocacy. Those have been sort of the three legs of our stool since the very beginning since our founding in 1977. What started to become clear were two things. First of all, not all small businesses needed loans. Some of them needed equity capital. And secondly, there became opportunities for other kinds of financing where CEI saw an opportunity to leverage our expertise and our knowledge of rural regions in particular to engage and sort of start that kind of financing as well. So the first really that I was referring to was around our venture capital subsidiary, CVI, or CEI Ventures. And we are now in the middle of raising and launching our fifth fund. We had our first closing in March of a little under $15 million and have a goal of reaching 25 million by next March. I think we all know that the vast majority of venture capital goes to the very largest centers of population and research and capital, but there are vast parts of this country, and especially including the Northeast, where our funds have focused, where there's a need for growth capital, and particularly growth capital that is lifting and catalyzing the creation and retention of good jobs, good quality jobs. And I think that's going to be even more important, frankly, in the post-pandemic period. We've seen, I think our workforce is still something like 7 million people short, or 7 million jobs short of where we were a little over a year ago. And so there are folks who either their company or their industry have shifted, and they need to find a new job either in their industry or in another industry. And so we need growth-oriented companies in our rural regions and in our small gateway cities. We need those companies to be growing good quality jobs. So these folks, as we have this sort of get over the dislocation that the pandemic has caused, that folks have an opportunity to secure a decent livelihood for themselves and their families. So venture capital will be critical in going forward, and our funds make sure that there is growth capital available in rural regions and small gateway cities. Next, of course, CEI was involved in the predecessor to the New Markets Tax Program, tax credit program, and have a large and well-regarded New Markets Tax Credit subsidiary that has invested in rural regions around the country. But most recently, maybe what you were getting at when you said the last sort of year or two, we launched a opportunity zone fund together with a partner, the Boulos Company, which is a real estate development and management company that's headquartered in Maine but works regionally and has worked nationally, as well as with an investor, the Wood Forest National Bank. We really sort of poked and prodded at the opportunity zone tax reform provisions and were somewhat skeptical about them, and just wondering, frankly, that since the guardrails were not there as they were with new markets to ensure that there would be positive economic benefit for low-income people living in the opportunity zone eligible census tracts, we finally decided, well, if mission-driven organizations are not involved making sure that they benefit low-income people in those census tracts, they won't. So we've been really excited about, we've made around 10 investments in that first fund. They range from very small communities like Pembroke, North Carolina, or Selma, Alabama, to large cities, Washington, D.C. and Philadelphia, and others in between. But we have been able to find some really very exciting and impactful transactions and projects with strong community support and very deep impact, both social and in some cases positive environmental impact. So we're looking to now raise another fund or two with that fund management company, and also to contribute what we're learning to the broader field. And
then I think you also have a solar company, a solar fund as well.
Right. That is, it's folks who know CEI are probably familiar with the fact that we've had a long-standing focus not only on economic and social equity, but also on sort of climate resilience and renewable energy. Low-income people suffer the most with climate change and are least able to be resilient. So we both invest in fact, we have, when we make a loan, we not only rate the financial risk with our due diligence, but also the mission impact, which is both social and environmental. So yes, we had done a fair amount of solar financing from our small business loan fund in Maine, but we launched several years ago Bright Community Capital, which is financing solar that in the C&I or community scale solar band. An interesting example recently in New England being investing in the building of 16 or 17 solar arrays on rooftops of affordable and elderly housing that is owned by and operated by a peer CDFI in Greater Boston, Madison Park Development Corporation.
So it's interesting that as you talked about that, and congratulations. I mean, that's a lot of different funds that you've got, and that really are representative of different parts of the capital continuum, particularly when you include the core CEI, CDFI activities as well. I mean, it sounds to me as though collaboration and working with others was a key element of helping you to achieve the goals that you've got. Is that right?
Yeah, I mean, we partner a lot with folks, whether it's on individual investments with banks or other CDFIs, or whether with sort of complementary organizations. We've done some solar financing in Maine in partnership with the Nature Conservancy Maine office, or our work with immigrants and refugee entrepreneurs through our program called Start Smart. We partner frequently with Prosperity Maine, which is a immigrant serving, immigrant-led organization in Maine, founded by Claude Berlanger, who is from the Democratic Republic of the Congo, and where folks coming, moving here who are often originally recent immigrants and refugees, and in some cases have been here for a while, sort of go and get support around, getting access to scholarships or wanting to start a business. And we partner as they are identifying folks who need the kind of help that we could provide, either through our financing or certain kinds of business planning and other support. We work and sometimes apply for funding together and that sort of thing. So we that I see as a sort of complementary partnership that we frequently do as well.
You mentioned, that you've been not lucky, but that you planned well to, get the sort of funding that you need and that you require to, achieve the mission that you've got. Are you seeing any change in the sources of funding? So you mentioned corporates at the top of the call, and I wonder how you're thinking about that. And if you could link that, because I know it's a passion and interest of yours, to impact investing and what you're seeing people asking you for or talking to you about or trying to understand.
Right. So one of the really exciting sort of developments that we've seen is that our CEI notes product has really steadily, but very determinedly been progressing and growing. We now have over 220 individual investments that are from either accredited individual investors or institutions that now are almost at the 15 million mark. And our overall loan portfolio is a small business loan portfolio is around 50 million. So we're around getting over a quarter of our small business loan portfolio is now coming from these investors. Originally, they were sort of friends and family, and they were folks who found us or we found them. Over time, we have developed strong relationships with wealth advisors. And so we're also, in a sense, they are representing our note as a possible impact investment, and they come through those wealth advisor relationships. That has been, we don't do a lot of marketing for that. In fact, because we can't, because of securities laws. And so the fact that we have, over the last around 10 years, steadily grown that has been terrific. And I'd say over the last year or two, we have increasingly been, folks are learning about us not only through wealth advisors, but some just running across our organization online or reading a news article, either that we've placed or other folks have written about us, and they say, I want to be investing my resources in a way that's better aligned with my values, and you represent where a terrific opportunity for me to do that. So we're we are expecting and hoping that those kinds of investments will continue to come. And it's wonderful. I mean, a vast majority, these are notes from sort of 3 to 10 years in length, and the vast majority of them renew when they come to their term. And sometimes folks actually contribute the interest. So there's some folks who are very much seeing this as entirely as an investment, and there are others that are seeing it definitely as a impact investment / philanthropic relationship, where they want the money back, but they're willing to or interested in contributing the interest. Either way, they help us to power our small business loan portfolio, and in a way where sometimes, especially for those who are sort of 5 years or longer terms, longer terms than our bank investors necessarily want to lend to us. So that's great as well.
And when you think about measurement of impact, where are you on that journey? And where do you think the industry, the CDFI industry specifically, is overall?
Impact measurement is tough in our industry, I think, for a number of reasons. One is that typically CDFIs have so many different sources of financing, and a lot of them have their own desires for what kind of reporting they want and what kind of metrics they want. So we have, of course, the CDFI fund and sort of OFN and ARIS type metrics. But then if you have project funding from foundations, it can be a whole line of business, in a sense, to be tracking all the different income revenue flows into the organization and the reporting requirements that come with them. I think for us, and frankly with Next Week's help, when we did our strategic plan 4 years ago now, we felt it was really important to create a sort of dashboard set of financial impact and organizational indicators that were sort of our key priority metrics that we would be tracking both at the staff level and quarterly with our board. And we have continued to do that. As we're coming up on doing a new strategic plan next year, we'll probably be tweaking that. But it's actually we've had to revise it very little. We've done a little bit of that, but not much. It's really been a terrific way of focusing all of our attention on what matters to us as an organization, to us, not necessarily to funder A or funder B, but to us, and making sure that we're keeping our eye on the ball.
So Betsy, my last question is really around the mission and the 3 pillars, which, as I recall, are good jobs, which you've talked about quite a lot, environmental sustainability, and there's direct linkage to some of the new product that you've got, and then shared prosperity. Is that still the same? And is there any change in emphasis in terms of your work?
I would say it has really remained steady. I do, as I look forward to our upcoming strategic planning, I can imagine at least 2 dimensions that we'll want to reflect on and integrate. One of them is our focus on good jobs, which is not only a living wage, but also basic benefits and a fair and engaging workplace. And we have sort of 7 factors that make up that framework. I think over the last year and a half, it's been more and more clear that it's not only around your income, it's around your wealth. So wealth gap in this country is extraordinary between communities of color and white communities. And I think although wealth is reflected in there because, for example, we look at not only sort of retirement, but other kinds of savings opportunities, as well as skill development, which does sort of enable you to increase your income, which translates into wealth over time. I think we'll need to think about how we incorporate are thinking about the wealth gap into our metrics and our priorities going forward. The second one, and it's around sort of more broadly shared prosperity as a vision and as a set of metrics for our work. Really thinking about how is that different from, or is it different from equity? So we've been, since before the pandemic, we've started doing work across our organization around equity and racial equity. And so I think we will probably be thinking a little differently and about that as we go into our strategic planning process.
So thank you for your time today. And I'd just like to ask before we close here, is there anything else that you would like to share with us?
No, I just think that this is, I mean, it's been a year of extreme tragedy on so many levels. Around 600,000 Americans who have lost their lives, and maybe some of them not necessarily because of the direction of the pandemic. Of course, the George Floyd and many others unnecessary deaths or killings. As you noted, though, it's also been an opportunity where the acceleration that the pandemic really brought to our field has created opportunities for CDFIs to be more, both, first of all, just for people to know what CDFIs are. I've always said it's impossible to build a movement behind an acronym, right? But maybe the acronym's actually getting more broadly understood today. But also just how CDFIs can really should be a central part of how the federal government, state governments, and our societies more broadly are trying to sort of attack the inequalities in our economic system, and how with sort of our capacities and our ability to innovate, and maybe with the right kind of support around technology, around engaging more with technology than our field has in the past, really see a tremendous opportunity for CDFIs going forward. And it's, as I said, when we started off the conversation, I think 5 or 10 years from now, we will look back on this as really a pivot point for our field, and a real opportunity for us to come together as CDFIs and with partners to take our field to the next level.
So Betsy, thank you very much. And thank you for the work that you and your colleagues are doing. It's really important, and I'm delighted to hear of the progress that you're making. Thank you.
Thank you, Tim. Great to talk to you.